Good morning, everyone. Today, let us discuss profit bar loss from discontinued operations in a company. Today's topics cover format of statement of profit and loss account as per Companies Act 2013, continuing and discontinued operations in a company, discontinued operations, meaning and examples, why separate disclosure for discontinued operations, presentation of profit and loss account statement of a company having both continuing and discontinued operations with a case study as an example. While prescribing a new format for statement of profit and loss account in the Companies Act 2013, three new concepts were introduced. They are profit bar loss from discontinued operations, profit bar loss from exceptional items, profit and loss from extraordinary items. After Companies Act 2013 amendment, extraordinary items are completely removed. They are not permitted in financial statements anymore. Under Companies Act 2013, Schedule 3 revised format, the statement of profit and loss is structured as 1. Profit bar loss from continuing operation, tax expense relating to continuing operations, profit bar loss from continuing operations, profit bar loss from discontinued operations, tax expense relating to discontinued operations, profit bar loss from discontinued operations after tax, total profit bar loss for the period of the company. The format for the statement of profit and loss account statement as amended in the Companies Act 2013 is produced below. This comes revenue from operations, other income, example interest on fixed deposit, total revenue, followed by expenses, cost of materials consumed, changes in inventories of finished goods and stock in process, employee benefit expenses, wages, etc., stores and spares consumed, finance cost, depreciation, other expenses, total expenses, then profit before exceptional items and taxes. Profit before exceptional items and taxes, exceptional items, profit before tax on continuing activity, tax expense, current tax, deferred tax, profit bar loss for the period from the continuing operations. Then profit bar loss from the discontinued operation, tax expense for the discontinued operation, profit bar loss from discontinued operations after tax, then profit bar loss for the period. For an example, Marsuki Limited is engaged in manufacture of passenger cars. It also had a separate division for manufacturing diesel engines suitable for passenger cars. The company stopped producing diesel engines and sold the assets of its diesel engineering manufacturing division due to lack of adequate demand for diesel engines. The passenger car manufacturing activity is continuing and it is a continuing operation. The stoppage of production of diesel engine is a discontinued operation. Conceptually, a discontinued operation refers to a component of an entity that has been sold off or is classified as held for sale, represents a separate major line of business or geographical area. This is governed under Companies Act 2013 Ind AS 105 if Ind AS is applicable. Income from discontinued operation, meaning this relates to a separate major line of business or geographical segment. This has been disposed of or held for sale and will not continue in future. It is shown as after profit from continuing operation in the statement of profit and loss, governed by Ind AS 105. Examples: sale of an entire textile division, closure of overseas branch permanently, disposal of a complete business segment. The business segment itself stops permanently. Why separate disclosure for discontinued operation? It helps users assess future sustainable earnings. Continuing operations reflect ongoing business strength. Discontinued profits or losses should not distort recurring performance. For credit appraisal, we normally focus on profit from continuing operations, not total profit. The separated reporting mechanism of continuing operation and discontinued operation ensures that the income generated from ongoing core business activities is clearly separated from the result of a divested or planned to be divested segment. Isolating these results allows stakeholders to better forecast the performance of the continuing enterprise. Another example, a company produces two products. One is the acrylic threads and another one is acrylic dinnerwares. The company Indian Acrylic Limited was set up for manufacture of acrylic threads. It has also a separate division producing acrylic dinnerware. The dinnerware division earned some revenue and also incurred certain expenses during the year. It disposed of its dinnerware division. The assets of the acrylic dinnerware division has a book value. Let us understand how the profit and loss account statement of the company will be presented. The company Indian Acrylic Limited was set up originally for manufacture of acrylic threads. It has also a separate division producing acrylic dinnerware. The company Indian Acrylic Limited has generated a net profit of 1,300 from continuing operation for the period ending 31/3/2025. During the year, in the month of October 2024, it disposed of its dinnerware division of for rupees 1,200 lakhs. The dinnerware division earned revenue of 2,000 lakhs and incurred cost of 1,500 lakhs during the period April 2024 to October 2024. Its book value was 1,000 lakhs. Tax rate applicable to the company overall and the segment is 35%. Present profit and loss account statement for the period of 31/3/25 for the company. There are three parts for this case study. One, the company has a continuing activity, manufacture of acrylic threads. Two, the company has a discontinued activity, manufacture of acrylic dinnerware. This division also has earned revenue and incurred expenses for certain period in the financial year. Three, the sale of assets of discontinued activity, that is manufacture of acrylic dinnerware, gave income to the company. When we present it, say revenue from continuing operation acrylic threads is 12,000, expenses of continuing operation is 10,000, profit before tax of continuing operation is 2,000, tax at the rate of 35% is 700, profit after tax of continuing division, that is acrylic threads manufacturing, is 1,300. Now coming into the revenue of the discontinued division, which has operated for a period from April 2024 to October 2024. The revenue was 2,000, expenses was 1,500, profit from the discontinued activity is 500, tax on profit of the discontinued division is 35%, which is 175. So PAT, profit after tax of discontinued division, that is acrylic dinnerware division is 325. Sale value of the discontinued division, that is acrylic dinner division, 1,200 is the selling price of the assets. Book value of the discontinued division was 1,000. Profit on sale of the discontinued division asset is 200, and tax on profit is 35%. So the profit after tax of the discontinued division, acrylic dinnerware division assets on sale is 130. So profit or loss for the period is 1,300 plus 325 plus 130, total 1,755. Thank you all. I shall come out with such small videos on lending topics. Subscribe to my YouTube channel, NPIers Learning Modules in Lending, and click the like button, which enables you to get notifications whenever a video of mine is uploaded. Follow me on Facebook and on Instagram.